Hello students, welcome to Accounting Explained at AccountWise Academy. This is Latha Venkateshwaran. This is the second video on return down value method. In this video, I am going to give a brief description about return down value method and we are going to solve a problem on return down value. Introduction to return down value method. This method is also known as fixed percentage on declining base method or reducing installment method. These are all the other names for WDV method. Under this method, depreciation is charged at fixed rate on the reducing balance, that is cost less depreciation every year. So this I will explain to you with an example. Suppose if the cost of the machine is 10,000 and the rate of depreciation is 10%, then at the end of the first year, depreciation will be 10,000 into 10%, that is depreciation will be rupees 1000 rupees. Okay. At the end of the second year, depreciation will be charged, that is cost less depreciation, first year depreciation. What is the cost? 10,000. What is the first year depreciation? 1000. So for the next year, we have to take 9,000 rupees only for calculating the depreciation at 10%. So 9,000 at 10% is 900. So second year depreciation will be 900 rupees and it goes on like this. Accordingly, amount of depreciation gradually reduces every year. See here, first year depreciation is 1000, second year depreciation is 900. So it has reduced gradually. The depreciation charge in the initial period will be very high and depreciation charge in the later period will be negligible amount. So see, as it keeps on decreasing, at the later period, maybe at the end of the 8th year or 9th year, it might be very less. Okay. Let's solve a problem on return down value method. The question is as follows. On 1st April 2020, machinery was purchased by Surya Limited for rupees 1 lakh. The rate of depreciation was charged at 20% under diminishing balance method. In the exam, they might give diminishing balance method or return down value method or WDV method, all are same. Okay. Show the machinery account for 4 years from 2020 to 2024. For this, we are going to open a machinery account and we are going to do it for 4 years, that is from 2020 to 2024. This is the solution to the problem and we have to first write in the books of Surya Limited, in whose book you are going to write. Next, you are going to open machinery account. Machinery account, and in the bracket we have written diminishing balance method. In the exam also I would suggest you to write the method of depreciation you are using for your answer. Okay. Next, machinery account will have 6 columns: date, particulars amount, date, particulars amount, DR onto the left side, extreme left, and CR onto the extreme right. These things you all know. For you to brush out these things, I am just telling. Okay. Next, we have to write the entry for purchase of machinery. When you purchase machinery, your asset increases. That is, machinery value increases. So it has to be debited, and your asset bank decreases. So bank account has to be credited. 1 lakh onto the debit and 1 lakh onto the credit side of the journal entry to bank. Okay. We are writing machinery account. So in the machinery account, we have to write bank on the debit side. Here you have credited in the journal entry. In the ledger, it will be on 1/4/2020 to bank account on the debit side 1 lakh. The next entry we have to pass only at the end of the year. Here we have bought machinery on 1/4/2020. So we will assume that the financial year is from 1/4 to 31/3. So here end of the year means on 31/3/2020 you have to pass the entry for depreciation. Okay, depreciation entry is depreciation is a nominal expense. When the expense increases, you have to debit it. So depreciation account has to be debited. Depreciation account debit to from where the depreciation goes from your machinery. So machinery value decreases. It's an asset, so it has to be credited to machinery. Value is 1 lakh into 20%. Since you have bought it on 1/4/2020 and you are calculating depreciation on 31/3, it is for the whole year. So we will take it for the whole year. 1 lakh into 20%, it is 20,000 for depreciation. In the machinery account, here in the journal entry, it is debited. Depreciation account is debited. So in the in the machinery account, it has to be credited on 31/3/2020 by depreciation. See here 1 lakh into 20%, 20,000. On seeing the ledger, your debit side has more total. So take the total on both the sides, on to the debit and to the credit side. 1 lakh, 1 lakh. On the credit side, deduct 20,000 from 1 lakh. You get 80,000 as the balance. So on 31/3/2020, by balance carried down, the balance for the machinery is 80,000. This is the balance you have to take it to the next year, that is on 1/4/2021. To balance brought down 80,000. Okay, I have uploaded videos on straight line method already. I have solved easy problem as well as tough problems also. You can go through those problems and the introduction to straight line method for a better understanding. This is the second video on return down value method. Okay, in the first video I have given a introduction for the WDV method and I have also solved a question to find out the rate of depreciation for WDV method. That's very important part which you will get for examination. Okay, so go through how to find out the rate of depreciation also from my previous video on WDV method. Now coming to the solution here. So we have brought down 80,000 from the last year. Next year, in the year end 31/3/2022, we have to find depreciation. Depreciation will be calculated on the opening balance of that year. What is opening balance of the year? 80,000. So 80,000 into 20% is 16,000. This is how WDV works. Okay. On 31/3/2022, we have to find out the balance carried on. Seeing here, debit side has more total. Deducting 80,000 from 16,000, we get 64,000 has to be as the balance for that year. So this has to be brought down to the next year. On 1/4/2022, it is to balance brought down 64,000. Again on 31/3/2023 year end, depreciation has to be charged. It will be charged on the opening balance of that year, that is 64,000. 64,000 into 20% comes to 12,800. Here also debit side total is more, so take the total to both the sides. Deduct 64,000 from 12,800. You get 51,200 as the balance carried down on 31/3/2023. Take it to the next year. On 1/4/2023, it is to balance brought down 51,200. On 31/3/2024, by depreciation on the opening balance of that year, which is 51,200 into 20%, 10,240. Debit side has more total. Take it to both the sides, 51,200, and on the credit side, deduct 51,200 from 10,240. You get 40,960 as the closing balance. So on 1/3/2024, to balance brought down, it is 40,960. So as per the question, we have done machinery account from 2020 to 2024. So this is how you have to do the WDV method of depreciation in the machinery account. If you would like to inquire about the online classes which I take or to get more worksheets, You can contact us at acc.wiseacademy@gmail.com.